Okay, so let's talk about UnitedHealth Group. We're talking about an absolute titan of American healthcare, and right now it's at the center of this huge debate on Wall Street. Is this thing a total disaster, a sinking ship, or is it maybe the buying opportunity of a lifetime? We're going to break it all down.
And look, if you want to get a sense of just how high the stakes are, you really only need to know one number: negative 48%. Yeah, you heard that right. In 2025, the stock of this once rock-solid giant has been basically cut in half. That kind of collapse, well, it sends shockwaves through the entire market.
So that leads us right to the big question we're tackling in this explainer. How on earth did a blue chip stock, a Dow Jones Industrial, a leader in its field, how did it fall so far so fast? And, the even bigger question is, what happens now? All right, so to really get it, we've got to first appreciate the sheer scale of this drop. I mean, for years, this company was an absolute market darling.
And just for some context here, UnitedHealth isn't some small-time player. This is the largest private health insurer in the entire United States. So when its stock collapses, it's a big deal. The price got hammered all the way down to a 5-year low, wiping out literally hundreds of billions in value and just leaving investors completely stunned.
So, what in the world happened? Well, it wasn't just one thing. It was more like a perfect storm of bad news that just slammed into the company, one thing after another. And this right here is the core of what we call the bear case, the argument for why the stock is in trouble. And this whole crisis didn't just pop up overnight. No, it was this rapid-fire series of hits. It all kicked off in February with these whispers of a DOJ investigation into their billing. Okay, concerning. But then by May, those whispers, they became a full-blown roar. The investigation escalated to a criminal fraud probe. And in that same insane month, the CEO suddenly leaves, and the company does something pretty drastic. They just pull their financial guidance for the whole year. And then, bam, July rolls around, and the earnings report confirms what everyone feared. And let's be crystal clear about this. This wasn't some minor slap on the wrist from regulators. We're talking about a criminal fraud investigation by the Department of Justice. For a company of this size, that is an unbelievably serious problem. It just adds this huge, scary layer of legal and financial risk. And that Q2 earnings report, wow, it really laid the financial damage bare for everyone to see. So profits, they cratered, dropping 40%. At the exact same time, their medical costs shot up by 20%. But the real killer, the metric that everyone watches, is the medical care ratio. Now, that's just the percentage of money they take in from premiums that they have to spend on actual health care. It hit almost 90%. Think about that. For every single dollar UNH brought in, 90 cents went right back out the door to pay for care. That just completely crushes your ability to turn a profit. So if you're a bear, if you're pessimistic on the stock, this is your argument right here. It's this toxic mix, a massive legal threat, costs that are just spiraling out of control, and a total leadership vacuum. It's no wonder that investor confidence just completely shattered, sending the stock into an absolute freefall. But wait, that's really only half the story. Because while a ton of people were sprinting for the exits, a whole different group of investors started looking at this and saw, believe it or not, a historic opportunity. And that's where we get to the bull case, the argument for why you should actually be buying the stock right now. And this is where you see the two mindsets just collide, head on. Most of the market saw a falling knife, a dangerous stock to try and catch. But the contrarians, they saw something completely different. They saw a really high-quality company that was suddenly on a massive sale, with all the bad news already factored into the price. So the first big pillar of the bull case is just the price tag, the valuation. The stock is now trading at just a little over 11 times what analysts expected to earn in the future. Now, for a market leader like this, that usually trades closer to 18, maybe even 20 times earnings, that is exceptionally cheap. It kind of suggests that maybe, just maybe, all that bad news is already baked into the stock price. Okay, next up, the dividend. Even with all this chaos in the stock price, UNH has just continued to be a dividend-paying machine. I mean, they've grown their payout for 15 straight years. And get this,
The 10-year average growth rate is around 14%. And because the stock price fell so much, the starting yield for new investors has jumped up to a pretty attractive 3.5%. But maybe the most convincing piece of the bull case comes down to this really simple but powerful idea. This quote here, from a really detailed analysis by an investor on Reddit, it just perfectly captures a core belief of value investing. When the people who know the company inside and out start putting their own money on the line, well, that's a signal you should probably pay attention to. And guess what? That is exactly what happened here. Right in the middle of all the panic back in May, the returning CEO, Stephen Hemsley, he put $25 million of his own money into buying company stock. $25 million. And on top of that, the president and the CFO also bought nearly $5 million worth. I mean, for the bulls, that is the ultimate vote of confidence. So let's just boil the bull case down. You've got a deeply discounted valuation, a strong and growing dividend, massive, and I mean massive insider buying, and this underlying belief that the company's long-term strengths and its dominant position in the market are going to win out over all these short-term crises. Okay, so we've laid out two totally opposite stories, right? On one hand, a total disaster. On the other hand, a deep value opportunity. So, where does that leave us? Well, as you can probably guess, the experts are completely torn. So what are the pros on Wall Street saying? Well, funny enough, they're overwhelmingly positive. Out of 24 analysts who recently covered the stock, a whopping 18 of them read it a buy. Only one single analyst says sell. So you end up with what they call a moderate buy consensus, which is actually pretty bullish given all the risks we just talked about. And what's even more telling is the price target. The average price target from all those analysts suggests there's a potential 23% upside from where the stock has been trading recently. So, despite all the turmoil, Wall Street seems to be betting that a recovery is actually more likely than not. But hold on, not everyone is that optimistic. A data-driven AI model that was consulted for a report by Finbold had a much more cautious take. Its conclusion was that in the short term, UNH is still a pretty risky bet. It warned that the stock hasn't necessarily found its bottom yet, and it could definitely fall even further before it starts to stabilize. And this really brings us right back to the central dilemma, the core conflict. The bear case is all about that DOJ probe, the soaring costs, the chaos in the C-suite. The bull case punches back with record insider buying, a rock-bottom valuation, and that juicy dividend. It's a true heavyweight fight. Fear on one side and fundamentals on the other. So, at the end of the day, UnitedHealth is a company standing at a major crossroads. Is this a falling knife that you should absolutely avoid? Or is it one of those rare, deep value opportunities for an investor who's willing to be patient? The answer really depends entirely on which of those two stories you think will define its future. And well, only time is going to tell us which one is right.